In-depth analysis of Stanley Drunkenmiller's top trading philosophies.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at eXp Realty, aka the Trading Agent, and we're going to do a little in-depth analysis of Stanley Drunkenmiller's, I would say, rules. Again, I'm going to start doing this weekly where I take a topic on Twitter and I just dig deep into it, because I've said this over and over all the time that there's a lot of people who post on Twitter, FinTwit, whatever you want to call it, with a lot of great insights, but there's no real in-depth analysis. Everything as a phrase or as a comment has a deeper understanding level of meaning. So what I want to do is take these concepts that people constantly refer to and tell you, hey, this is what you need to do for trading. It's ABC. But let's break it down and actually think about how it implements into your systems, into your life, into your personality. Because again, everything on the surface, headlines are great. It's the details. It's the why. It's the understanding. That's how you really learn to trade. Because again, trading is an experience game. Like, I can give you a reference headline of what to do, but everything is in perspective. You need to have the understanding of why, because you will never follow a rule if you don't know why. I mean, I know that's how I'm wired. Like, if you tell me don't eat this, it doesn't really make as much sense as, well, why should I not eat that? It's not good for me. Got it. Why? Oh, because it'll cause these problems. Duh. Well, now I understand it better, and it's going to make me realize that ultimately, this is why I don't need to do it. So if I ever have any, and again, this is what usually happens in trading, you lose perspective, and you're like, wait, why am I doing something again? Why do I need to do this? Well, here's why. Not just, hey, Dan, have tight stops or roll up your stops. Like, this is why, because you lose money or this, or this, whatever. Hopefully that makes sense. Again, here's Danny Baldus. I have no clue who this gentleman is. Seems genuine in posting this. Let's get into it. Because again, if you don't know who Stanley Drunkenmiller is, yeah, he's averaged over 30% returns the last 3 decades. He had many of years where he did way better than that. And again, I have taken my skill sets and wrap them around his personality of skill sets. Again, because all of us, this is one thing about trading. You, me, everybody in this courtroom, we have personality traits that differ in how we execute. Some people like more risk, some people like less risk, some people want to trade full time, some people don't. It doesn't necessarily matter. It's how you execute these rules based on the time frames you are involved in. Say you're a day trader versus a swing trader versus a position trader, whatever. Let's get into it, because again, I think Drunkenmiller, again, whether you agree with his politics or personality, I don't give a crap. You know, he is a great money manager trader. Position sizing. 1, it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. An intense focus on capital preservation coupled with a big bet approach. Home runs is a barbell philosophy. I say this all the time in teaching the Discord room, and it's in my notes. Again, I want to cut losers fast. I want to be wrong and figure that out quickly. And then when I know something's right, I want to leverage it large with tight stops. Now, again, position sizing to winners versus losers, right? Like, you have a core position you hold in a winning trade and you can leverage it up. I talk about this all the time. If the market is telling you you're correct, you add to your winners on dips, right? You trade around the position. Now, you don't get crazy the whole trend, but think about it. If a trend is starting, the odds of a greater up move are there, so you can leverage up. But as soon as the move now starts to exhaust itself, or it's been going on for a while, that's when you have to be careful. So at this point, when it comes to position sizing, the bottom line is try to identify what is working the best out of your trades. Now, this is where people who, I feel like I fight with them daily in the Discord room where they're like, oh, I'm looking at this stock and I'm looking at this and I'm looking at... You guys are making it difficult. Stick to what is winning. If you have 5 or 6 trades, again, it doesn't have to be something that I pick. If you notice something is acting great and it's following the market and it's leading the market, let's say the market is following whatever, you have a trend. Let's just re-say that. You have a trend and the market is doing something and you have a trade that is outperforming the market and leading, you don't need to go look for other names. That's the point with Drunkenmiller. I mean, I think, and I say this all the time, you don't need to have 100 great trades for the year. You need to have a dozen, maybe one a month, and you absolutely smash the crap out of them, and you make your whatever percentages you can think are possible. Again, maybe it's a 25, and this is how you double and triple your accounts over time. Think about it. Drunkenmiller is using monster numbers. Remember, he's using hundreds of millions to billions of dollars. You on your own are doing thousands of dollars, hundreds of thousands, maybe small. It's much easier to double and triple because you are not. Why? You do not move the market. Drunkenmiller would move the market. Like, our potential to make great gains is depending on how you position size into something because you see the evidence. So please, when I tell people like, hey, why are you looking at these other names that don't seem to matter? This is what you're missing out on, the opportunity cost to position size and manage a winning trade. Think about it. If you have a winner, you have identified a winner, why would you bet on another horse? It's a race, 12-horse race. You want to pick the winner. You don't want picking second and third really isn't going to get you that. Okay? Finding a mentor early on. If you're early in your career and they give you a choice between a great mentor or higher pay, take the mentor every time. It's not even close. So here, I would argue in this situation, it's hard to find a great mentor in trading. Like, let's be honest. Like, there's a bunch of idiots on the internet who are social media professionals that try to play stock pickers. I'm sorry, that's just how it is. How to find a great mentor in trading? You are not going to find them by just perusing FinTwit. You might get lucky finding someone like myself who has studied this stuff, been in finance for 20 years, but 99.999% of the people on FinTwit are not real traders. They're marketers. They're stock pickers who pretend they always win. So if you are going to find a mentor early on, be prepared to either pay for it, or my favorite mentor for most of my trading was, again, people in finance, but they were all sales folks. The past. Everything you need to know has happened before. I say this, if you read Reminiscence of a Stock Operator by Jesse Livermore, the market doesn't change. People don't change, and the market tickers just change. That's all it is. The same action changes from ticker to ticker, but people are still emotionally wired the same way. The market just has now found accelerated ways to take their money. So if you start to understand this stuff and you study the past, you understand the repeating formations, you understand that literally watching the market all day, every day, makes no one rich, then you realize it's like reading books versus watching TV. Like, read a book to study the past, to understand what's going on so that you can execute in the present moment and excel. Finding a mentor is extremely difficult. I tell people, like, I do this for free because it's all educational. To honestly take on someone as a mentor or as a mentee, extremely difficult because, again, a lot of this is mental. You know, you can figure out trading in pretty quick amount of time based on just the execution, how to do things. It's the mental part of executing that's always incredibly difficult. And again, I say this all the time, and that's why 90% of traders fail. Like, you can literally know what to do, but you can't execute it. You can know you shouldn't date a terrible person. You know you shouldn't eat a tub of ice cream. You know you shouldn't eat a cheeseburger, but your emotions cloud your judgment. You do it anyway. Oh, you know you should go to the gym, but you don't do it. Like, I'm talking about, these are things like even I struggle with. Like, oh, but why? Well, my emotions. I feel a certain way. I let my emotions control my judgments, right? Diversification can be a hedge for ignorance. I think diversification, all the stuff that are teaching at business school today, is probably the most misguided concept everywhere. As somebody who has a finance degree from a highly prestigious business school, I completely agree. Diversification is the lazy man's way of investing. Buffett said it best. Again, if you really see it, put all your eggs in one basket and then watch the basket very carefully. This is the key to trading, honestly. I mean, again, diversification is lazy. Try to, again, pretend every stock is a child. You have 20 kids, good luck managing them. Because, again, to know everything about everything all the time, impossible. Have a handful of winners, maximum. Handful of stocks that you are trading. Again, I review 30, 40 stocks every day. They're the same 30, 40 that I think are strong stocks in different sectors. I can't really go around and try to manage 250 names. So again, people realize that once I start trading these names from this video, what do they notice? 3, 4, maybe 5 names max. I don't need to diversify. I'm trying to whittle down what I think is going to work, and then what isn't working, I even whittle it down even more. Now, that's swing trading. Now, day trading, every day is different. We know that. Pick a basket or have names that you follow that's set up. But think about it. Think about what diversity really does to you. It's a mental backlog. You can't think about 20 different things at once. And again, maybe you trade 5 names in the same sector. I would consider that one trade. They might all have little difference in their actual, companies, but they're all in the same sector. Think of it like the SMH. If you're trading AMD, Nvidia, Qualcomm, Lam Research, any of these names, they're all in the SMH, right? Like, think of an oil name. Your Exxon, Chevron, Conoco. What's up, Kat? It's all the same, right? Like, they're going to follow certain fundamentals of the sector, and people are going to buy the names based on oil fundamentals. That's not, to me, diversification, and that's okay. Like I said, when we play oil shorts, you could have thrown any short in there for the most part, right? We're playing the SMH up. Pick the basket of stocks, or sometimes buy the ETF. I tell that to people. Buy the leverage ETFs. If you really want to leverage up, why play AMD when you can buy the Soxel that'll move 3 times the SMH, which, again, AMD can outperform the SMH, but now you don't have the individual stock risk. Mental flexibility. The day before the crash in 87, Drunkenmiller switched from net short to net long. He quickly realized that he made a terrible mistake. The next day, he flipped his book and got short the market and actually made money. Strong opinions, weakly held. Friends, I think that's the hardest part people have with following me, is they don't realize I have strong opinions when I have evidence. And if evidence changes, I weakly hold on to my opinions. Like, I'm willing to be flexible. You have to be, folks. The market's always changing. Like, to say that you're going to buy gold. And so here's an example of how so many people got wiped out. I love gold. I've always been a metals miners trader. I love that stuff. There are times where holding it and buying it have been wrong. I'm mentally flexible. Again, inflation. I think about like the whole perspective of the last couple months. Like right now, it's July 2022. Bitcoin and gold, silver, supposedly inflation hedges have done terrible. They're down. Again, I have strong opinions, but I don't hold on to them. Like, again, that's why we dumped stuff in April. Go watch the 420 video on materials. It was just, you had to. Again, I'd love gold long term, but guess what? I don't want to hold on to losers. Again, that's not easy to do. Like, how many times have you been into a trade where you thought something was going to happen and it did? Great, you're not a problem. But think about all the times where it didn't. Those are the times that your account got ruined. So how do you fix that? You set your mental stops. You set your stops, or you start watching the action. You start to learn, like, hey, that's not bullish. Why would I hold on to a stock showing non-bullish formations? If you hear, do you want an example? Gold. Everybody loved gold, right? Everybody loved gold in the spring of 2022, right? What did we talk about? Potential novice gap. Yep, came back. But here was the thing again. I still love gold and held it through here because it seemed obvious. Ukraine, inflation was ingrained, entrenched. CPI is going to go up to 9%, which it has. This was the problem. You hit 2011 highs, and then you professionally gap down. Game over. Gone. Absolutely gone. Lower highs and a gap down. You're gone. Again, I have strong opinions of gold long term to go to 10,000 in my opinion. But I weakly held on because, again, the evidence changed. Like, you just have to be like that, folks. Hope this is a good example. Humility. Every great money manager I ever met, all they want to talk about is their mistakes. This is great humility. Yes, I talk about this all the time. Write down your bad trades, what you messed up on, what your missed opportunities, accept them, learn from them. I'm always trying to stay humble to the market because the market, the one thing I learned is every time I'm not, it just beats the shit out of me. It's like, it literally will remind you to be humble every time because as soon as you're not, it just beats you over the head and it gets expensive to learn that lesson. I like to think of Tom Brady. I know he's not maybe the most humble guy in public, but in his style of his execution of being a great quarterback, he practices. He makes a mistake, he makes it a strength, he grows. He never focuses on his mistakes long term. His goal is to how to fix them. So how does he fix a throw or a mistake from a game? He analyzes it. Now, again, in the game, he has a great mind that he's able to forget what he messed up on and move forward. But we're all the same. Michael Jordan, whatever your favorite athlete, if they had mistakes in their career, what did they do? They learned from them and they became strengths. That's got to be you. That's got to be me. People don't know what drives the market. Most people in the market are looking for earnings and conventional measures. It's liquidity that moves the market. Yes, I agree. It is. The market maker is a liquidity-seeking mechanism. Without liquidity, it does not want to mark things up. If they don't own any Apple stock, the market makers, institutions, whatever you want to consider your brand of who the market is, they're not going to move it up. They don't want, again, think about it. There's no reason to mark up prices and manipulate the market if there's no inventory in their hands. They don't have 1 million shares. Why would they want to mark it up? Think about it. Valuations only tell you how far the market can go once a catalyst enters the picture of the change the market direction. And I don't give a crap about valuations. I said fundamentals don't matter. I work for EXP. We have great fundamentals. We are growing constantly. 90 to 13. Your belief in fundamentals and all these things and again, this is literally what the news and financial media, think about it. The market is a casino and you are taking advice from the house. You're going to lose. So knowing what drives the market, again, I recommend reading books. Reminiscence of a Stock Operator. There's 2 books. Reminiscent Stock Operator, Jesse Livermore. The other one, Volume Price Analysis by Anna Cooling. Again, if you are a trader and full-time, not even full-time, if you do trade, I also would recommend the Stock Trader's Almanac. I think it's Jeffrey Hirsch. What drives the market, how it moves? Oh my God. It's not rocket science, but people don't want to study it. That's like the irony of all of this. Watch the Fed. Once an economy reaches a certain level of acceleration, the Fed is no longer with you. The Fed instead is trying to get the economy moving, reverts to acting like central bankers, and they start worrying about inflation and things getting too hot. Yes, watch the Fed because it's a liquidity-driven game. If they're pumping liquidity into the system, the market typically goes higher. I've learned that lesson many times, thinking that the market should drop, but then it's like, well, the Feds are still pumping liquidity, and it goes higher every time. We are now entering a time where Feds will begin tightening. If they continue to proceed with this, you are in a bear market. Let's just keep it that simple. I've said this for months. Literally did in November, recorded the video, posted it. It's called Tech War. Who wins it? You're going into a bear market, okay? Now, again, as of we speak, we're actually probably setting up for a bear market rally, which is a nice rally. But what is the one thing that you should realize? This is going to be all caused by the Feds pulling the liquidity out of the system. No more stimulus checks, no more government insistence. All this stuff leads to what? Market pulling liquidity, profits being taken, tank. All right? Be decisive, open-minded, flexibility, and competitive. Being indecisive comes down to lack of education and conviction. I always say this, fear. If you don't know what you don't know, you're scared, you don't act. Don't marry your stocks, be flexible and unbiased. I never marry stocks. People realize, well, I guess I married gold on paper, but we're technically taking a break. Again, I want to marry what's working. I want to go with the best trades. Again, I know this might be unconventional because, again, what's conventional in our society? If you make a vow to marry something, you stick to it. Well, in trading, you don't have any conviction. Your conviction is to winning. Who is the winner? Well, it changes. It absolutely changes week to week, month to month, year to year, bull market to bull market. Keep in mind, investing is a game. It's okay to have healthy competition with yourself to improve and get better. This probably should be a rule in its own. How do you become better in any sport, trade, skill? You have to be in competition with yourself. You have to love the training. I used to do this every day for an hour, and it'd be called Guess the Next Candle Game. I would go back in time. You'll like this if you're newer, or even if you're following. And I would go, here. I'd say, what's the next candle? I go, well, that looks like a bottom, right? A little wipeout during a bull market. I would say worst case scenario, we're coming back to the 20-day. Best case scenario, you kind of just continue the trend. Well, it was continue the trend. And again, you could have, I know this is cheating because I have this blue box up there so I can see it. Well, what? It probably held up against the highs. Again, what happens 20-day? Oh, once the 20-day breaks, now what? Channel low should be expected, right? Oh, guess what? Wrong. Why? All right, well, I'm assuming there's something going on here for this big gap down. Now what? I'd say doji with big volume, right? I'm probably going to have a correction, bounce back. I know I saw that, but that's what I guess. 20-day again. 20 days curling down. I mean, you play this game where you literally try to predict the action, and you do it over and over. And I'm telling you, if you do nothing from this video and all you learn is that play the guess the next candle game, oh my God, you're going to see the market different because it's like reviewing your footage of your own games, right? You played, I don't know, say basketball. You watch back your film. You figure out what your weaknesses, what you didn't see coming, how to anticipate with the defense, whatever you want to call it, strategy. You turn that into your own weaknesses, strengths, and then to strengths. Oh, it's amazing. Hedging. I don't really like hedging. If something needed to be hedged, you shouldn't have a position in it. This is what I agree with. I will sell covered calls because, again, you can get paid on it. And sometimes in indecisive parts of the market where, say, let's go back to the charts. Here would be an example. If you were running channel high and you thought this was getting exhausting for the SPY and you sold the 430 call, 425 calls, market pulled back. Yes, maybe you didn't want to short the market to sell your position in the SPY, but you wanted to hedge. That's different. But if you actually believe the market is changing, you should not be hedging. It's a bear market. You need to be cash or short. In a bull market, you need to be cash or long, and hedging with covered calls. And again, you can short in a bull market, but it doesn't have much juice. So again, I agree with this hedging. Oops, I don't really believe in it. I just layer in and layer out. I've told people that. Like, that's the key for me. Layering in, layering. That's my hedge, right? Say we buy 1,000 shares and it starts to look like it might pull back. Well, now I own half of that. And what's my core position? Maybe a core position is 300 shares. Well, then I'll hold that, and if I'm wrong, we'll see what happens. I can add, but I really don't hedge. It's more of position sizing changing. Learn from your mistakes. Bulls make money, blah, blah, blah. Yeah, whatever. That's a Kramer saying. And I strongly believe the way to make long-term returns in the business that are superior is being a pig. This is what's funny. I'm always a pig in my trades, right? I occasionally will get slaughtered. That's part of the market. I learn from my mistakes. I don't put myself in a position to get slaughtered. That's why I always tell people, like, they come in, they ask me about some random stock, and I'm like, that thing is potentially a disaster waiting to happen. Well, I think it's going higher. I agree with you, but I don't want to be in a stock or put myself in a position to get beaten. That's why I trade the leaders. I trade the names that are stock leaders or market leaders, because the ones that aren't, now again, we can speculate in small caps. We'll do that, trust me, in a bull market. But in a bear market, absolutely not. They are the first things to get beaten and then not come back to life. So again, how you learn from your mistakes. If you are scared to make a mistake, paper trade. Make every mistake on paper. Learn for free. Don't be like me. It's cost me at least 7 figures back of gains over time. Multiple 7 figures, I would probably argue, to learn these mistakes. Now again, they all had to happen. They're all going to probably happen to you. Again, maybe I'm your mentor or help you out with it. I'll give you some advice to sidestep that stuff. But just be aware, your mistakes will be costly if they are in the market. But don't be scared of them. Like, say scared money doesn't make money. That's the truth. You can't go to a casino and not gamble and not win. You can't you can't go into a casino and just walk out with $100. You got to step down and put something on the table. You can't be scared. Invest in the future, not the present. Everyone sort of lives with their rulers in the past and doesn't look at coming changes. It's less important what a company has earned in the past. It's more important what others think of the company will earn. Love this rule, because I always talk about, like, right now we're in a bear market rally potentially. Everybody's bearish. Everyone's looking at the data. Everyone's looking at the June CPI, and the market's rallying. Yes, we know inflation. What have I said? Inflation is peak near term. Market probably gets comfortable with that, could rise a little bit temporarily. You always have to try to anticipate the market. It's great to have evidence from the past. Now, again, studying formations, whatever. But you have to realize everything is culminating in when does it peak, when does it change. The market is always discounting what is known. You have to remember that. Once the market knows something, it discounts it. When I mean saying discount, it prices it in. And so what does the market always try to do next? Look towards the future. You have to be able to anticipate. If you cannot anticipate things, why are you even trading? Think about it. The point of trading is to buy low, sell high, to sell high and cover low, whatever, to anticipate, right? So if you're always looking backwards at data and you're always looking backwards as in sentiment or looking backwards in a way of it doesn't really help you anticipate the future, again, think of it. The past is a good tool. Learn from the mistakes. But if you live in the past, you can't really live in the present or anticipate the future. I know this is not even a trading concept, but think about it in your life, right? How do you live for the future by living in the past? How do you anticipate the future if you don't know your past? Again, you know your past, but you don't assume what? Because something has always happened recently that it has to happen again and again and again. No, like patterns change. The market changes. That's why people always go, how do you know, for example, we're long the SMH. How do you know when to sell semiconductors? How do we know? We started buying it down here, added down here. Well, buy the rumors, sell the news. Oh my God. What do you mean? Like, what? How simple is that? Yeah, because once the news comes out from the CHIPS Act, you'll have a catalyst to create liquidity. Now, again, invest in the future. What did we anticipate? The CHIPS Act would be beneficial to the semiconductor industry. But if you didn't know that and you just thought it was a bear market, which it is, and that everything just goes down always in a bear market, you're not really understanding how things are changing, how you anticipate it, right? This stuff is really difficult on a psychological level. It's a game. If you don't love the game and understand, because again, you and I will play the game differently. Remember just though, and I'll also wrap this up. In the end, you are interpreting the market. I am interpreting the market. We're trying to do what the market is doing, not what we want it to do. That's the hardest part, right? Things change. You want to anticipate it. You have to be mentally flexible. That's the game. That is literally one of the most important things that you'll ever realize about it, is that I love gold for the long run, but I don't stay bullish paper gold all the time. That's where you see, and again, if you've gotten this far and you dig into stuff, think about all the people who bought uranium, gold, silver, all of these really trendy, like long-term no-brainers, but have been wrong. And people have lost tons of money. Why? Because they weren't able to study the past to realize that, hey, it wasn't a commodities bull market, first of all, and B, you got to be mentally flexible, right? You have to invest in the future, but you also have to realize, like, hey, if you're wrong, learn from your mistakes. Put all these rules together. Be decisive. Be flexible, right? Know what drives the market, right? Have humility. Get out if you're wrong. Again, mental flexibility, is that two? Whatever. Again, all these things, position sizing. If you stayed in a losing trade for the last 5 years, 6, whatever, 5 months, doesn't matter. You're doing this wrong. Because again, our goal is to go with the market. I hope this stuff helps. Stop by the Discord room, come by, ask questions. I always tell people that this channel is really built for traders who are struggling, but with experience, because I can usually tell somebody in about 5 minutes what their biggest mistakes are, how to fix them. They'll have to figure out how to execute them. That's usually what it is. Like, you have this great knowledge and you're so close to your own success. It's just there's a few repeating tendencies that you do, mistakes you make, that do what? They lead to your failure. Again, it's like 5 steps forward, 5 steps back. The goal is to become 5 steps forward, 1 step back, 3 steps forward, 1 step back. Our account balance should be like a bull trend stock, higher highs and higher lows. That is the ultimate goal, to trade well. Hope this helps. If you have more questions, you want to dig into some of these comments, please, or this video, leave a comment, stop by the Discord room. The link is always in the description below for all the videos. Have a great I mean, have a great life of trading. Again, if you don't pick this stuff up and it doesn't seem to ever melt in your brain as a system based on recurring patterns, knowing the past, being anticipatory of things, you're not going to be a great trader. You're just going to be what? You're going to be average. And what is average? 90% of people fail. If this content helped you, please feel free to share it with somebody who might be needing same kind of information. Again, you don't have to struggle, but you also have to be willing to admit you're wrong. Talk to you later.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.